Gary, thanks so much for joining us.
Thank you for having me.
So we're looking back at a company that has had, strong growth, but you're looking at a period right now where disappointing. You've seen that reflected in the share price. Basically, what have been the biggest drags on that basically bottom line number?
Well, a couple of influences. Firstly, our revenue expectations weren't met particularly in the first quarter. We had a very difficult first quarter, but since then it's been improving quite significantly. But one of the biggest influences for the results is that we've also been making very significant investments in the business, and therefore putting disproportionate costs, if one would call it that, and that's impacted our bottom line for this half year.
Talk to us about the state of the technology sector right now, because you're not the first technology company that is predominantly based in South Africa that's reported lower earnings. Are there industry-wide problems at this point in time, or larger players taking away business?
Well, I think it's been a little bit of a difficult time, and those who have shown good growth it's largely been on the back of an acquisitive strategy. The rest of us have really been treading water, those who haven't been on the acquisitive trail at this stage. It's not the worst that we've seen, but it's not really been a buoyant marketplace. But like I'm saying, from a difficult first quarter, it's been improving steadily, and we're very encouraged about what it's looking like now.
Tell us about some of the new contract wins that you have had in the kind of quarter two that will boost earnings going forward.
Well, it's a little bit more of the same rather than new contract wins, and that's part of why I'm saying the first quarter has been quite difficult, because some of the expected revenue didn't come to bear. There's been a little bit of a deal slippage. For us, our performance in government continues to be quite poor, and we don't foresee that it's going to improve for us, even though generally there's been an uptick in that area.
I mean, when you say deal slippage, it's kind of an indication of competitors perhaps coming in and winning business where you might have had business before.
Well, by deal slippage we mean the business that wasn't awarded at the time that we thought it would be awarded, where there's still a chance, and fairly good chance, that we could still win it.
So tell us about your investments and how these are going to add to earnings going forward, because as you say, it has been a period of putting money into the business and hoping that you'll see that ROI going down the line. What are your thoughts on kind of the return on investments, and when we're going to start seeing this in the numbers?
Yes, so there have been two principal areas of growing our business. Firstly, growing out of the commoditized parts of our infrastructure business onto the higher end, higher parts of the value chain. And secondly, diversifying a little bit more out of infrastructure per se, and building our both our managed services and the solutions business. The business in the managed services and solutions is more longer term. The deal cycles are longer, and when it pays off handsomely. So when will that come through? I couldn't put my neck on the block here. But
that's been a significant shift in strategy away from infrastructure to kind of...
Well, if you look about 4 or 5 years ago, infrastructure was about north of 80% of our business.
Yeah.
As we speak today, it's less than 50%, more like 40, 45% of the business. So that shows, and all of that has been achieved organically.
You've signaled that specifically enterprise content management, ECM, has been hit by competition in the sector. What are you doing to create an offering that you're basically able to continue to hold on to market share and boost market share there?
Well, it's primarily about holding on to the skills that we've built to date, holding on to the people, and making sure that we can continue to compete out there. We're having new competitors who don't have the skills base, who have to find people someplace, and unfortunately they're looking to us to fulfill.
I suppose you've got to just up those salaries. More wage inflation in South Africa. You mentioned acquisitions in the local economy, and you specifically said in your earnings that you're looking at possible acquisitions. Tell us about these and where you've identified gaps, perhaps in your offering, where these acquisitions could bolt on. Yeah,
we've always said that our inclination is more towards organic than acquisitive growth. Having said that, we've always been on the lookout. We've said that we will do an acquisition where it meets our strategy requirements and meets our valuation expectations. And we have looked at the whole number of acquisitions. Unfortunately, we haven't been able to satisfy both those.
So there's nothing
conditions
out there to buy at this point in time?
There are a lot of things. Sometimes companies that we really would have liked to get on board, but we haven't been able to satisfy ourselves as to the valuations thereof.
How much money do you have available for an acquisition?
Well, you've seen our balance sheet. We're a very cash generative business. A lot of that cash we do use in terms of our working capital, because especially in the services and solutions business, it takes up a lot more working capital. But we're very healthy, and we have some firepower at our disposal.
Just the last question I had, and I spoke about at the beginning of the interview, is the reaction from the market today. I mean, shares were down at 4% when I last checked. How can you restore confidence from the market right now that Datacentrix, is going to continue to deliver?
I would have hoped, having heard why our earnings went down, the market would take some confidence from that. We could have taken some fairly short-term view and focused more on building on showing the results now at the expense of long-term growth.
Yeah.
We have put costs in the business because we're building the business, we're investing in particular areas, and we're quite confident those will pay off in the future.
Okay.
Otherwise, we could just have shown better results now.
That makes perfect sense. Thank you very much for joining us today. Datacentrix Chairman Gary Morolo.